and GPUs, and then ultimately scales up to ASICs around 7, 8 years ago. And so that was kind of the start of the industrial scale of mining, where Bitcoin mining companies, Bitcoin data centers are looking for megawatts of power instead of just kilowatts of power. And I think at that time there was, there were certainly opportunities. Maybe not too many questions were being asked by the utilities or the energy companies. They were just saying, yeah, I mean, buy a few megawatts of power and that'll work. But then there was a little bit of pushback there when those companies were looking to scale, and you had some utilities and municipalities that started to ask more questions and maybe even stop serving that type of load, or there might have been local regulations that started to create issues. But then in the last, I think, 4 or 5 years, the industry didn't go away. The demand for power continued to increase even more. And what we've seen there is, from the perspective of Satoshi Energy, we work very closely with the owners of large generation assets and help them sell power to Bitcoin data centers. And it was a big education process. It was a big process. A lot of work went into kind of figuring out which markets make sense, what sort of power contract structures make sense, what locations make sense for Bitcoin mining, and helping to educate those energy companies on how to best sell power to those companies. The biggest question at that time was always around the creditworthiness of the power consumer being the Bitcoin data center. And so there's numerous ways to approach that, numerous ways that we help to educate them and kind of solve for that challenge, to make sure that they're always made whole. They're always going to get paid for the power that they're delivering to Bitcoin data centers. And I think that added a lot of comfort. And then in that time frame, there's also been a couple of bull markets with regard to the Bitcoin exchange rate. And it's been interesting to see during the bull markets, the energy companies have started to dig deeper into, okay, maybe I should be investing in this piece of infrastructure, into this Bitcoin data center.
In this frontier moment, Andrew is talking about large energy companies entering the Bitcoin mining sector. Let's recap how 3 well-known energy companies have been participating in the Bitcoin mining industry over the last few years. 1, Exxon Mobil. They've been working with a Bitcoin mining company, Crusoe, in North Dakota to turn wasted gas into energy for mining Bitcoin. This began as a pilot project back in January of 2021. Last reported, Exxon was thinking about recreating the pilot project in Alaska and 4 other countries, including Nigeria, Argentina, Guyana, and Germany. 2, Marathon Oil. They're based in Houston and also power co-located Bitcoin mining operations. On their website, it states that they use gas that would otherwise be flared due to the lack of a gas connection or gas takeaway capacity constraints to effectively generate the power for co-located computing and data centers used for Bitcoin mining. 3, ConocoPhillips. They also have publicly stated that they are selling extra flare gas to Bitcoin miners in North Dakota, but they have not disclosed which Bitcoin miner and how much gas they are actually selling. All 3 of these companies have partnered with Bitcoin miners in various ways, but it still publicly is an incredibly small part of their business. But as Bitcoin continues to grow, it appears likely that all 3 companies will focus more resources on Bitcoin mining. And now back to Andrew.
And our advice during those times has actually been, well, you're actually better off kind of holding off on the investment until the Bitcoin ASIC price comes down and then the capex is a little bit more reasonable than what it is today. But for whatever reason, even these very intelligent institutional investors are buying high and selling high rather than buying low and selling high. So that said, they continue to want to sell power to these data centers. They're getting much more comfortable with that. I think they've taken the stance, especially with the Bitcoin spot ETF approval earlier this year. There seems to have really been a shift in perspective where it's not like, okay, maybe this industry is going to go away, to where now they think, okay, this industry is here to stay, and how do we figure out how to best serve it? So we've seen a lot more comfort around selling power to Bitcoin data centers, and an increasing amount of investment from some of these large energy companies actually directly into the Bitcoin data centers, maybe as a partial equity investment in a project, or even a larger investment into Bitcoin, Bitcoin mining as a whole. And even a couple of large energy companies, at least privately at this point, are holding Bitcoin on the balance sheet. They just haven't made it public yet.
Very interesting. Yeah, you touched on the idea that a lot of these energy producers are or at least historically have been somewhat concerned about the credit worthiness of Bitcoin miners. What's been like the concern there? Is it just that Bitcoin is so new, or is it also like just that Bitcoin is super volatile that you never know if Bitcoin falls 50%, this entity miner might just go out of business?
Yeah, it's a little bit of both, but it ultimately comes down to them. And this depends on the type of power contract. So there's maybe 2 flavors of this. One would be what we call an index contract, which is the data center is going to be purchasing, or the Bitcoin data center is going to be purchasing power effectively in real time at a real time price. And so that's a relatively low risk for the seller of energy, as long as they have the right sort of billing cycle. So it basically creates accounts receivable risk. Accounts receivable is an asset. It's good to have that. But if accounts receivable builds up over the course of a month, and then that data center goes bankrupt, then that energy company is on the hook for a few $1 million worth of energy. You're talking about a 100 megawatt data center or greater. The the way to solve for that one is just more frequent billing. Actually, it's been solved in two ways: prepayments for the energy, which is not favorable to the data center. That actually adds a huge cost of capital to the data center for having to make that prepayment. So the way to kind of fix that for both sides is actually to do more frequent settlements, which Bitcoin solves for that in a really fundamental way. The second risk would be more around a fixed price power contract or a hedged power contract. So if the energy supplier or if the energy consumer, the Bitcoin data center wants a fixed price for that energy, they want to hedge over a long enough period of time to keep that price fixed. There's a mark-to-market risk that needs to be accounted for by the seller. So they have to go out and buy that power at a somewhat lower price and to then lock in the price for the energy buyer. So that's a whole different set of collateral that they have to account for and find a way to collateralize or de-risk. So that's been a big challenge. Also for Bitcoin mining companies, that's just a huge amount of USD capital that they could otherwise be using to build out new data centers that I think has prevented those types of hedge agreements and actually kind of cornered the market more towards the index contracts.
Yeah, it also seems like, at least my experience with Bitcoin adoption is everyone, tends to get into Bitcoin at the same time, like when the price is going up. Like that, I'd say like that's the key benefit of Bitcoin, the number go up technology. And so maybe all of those jurisdictions will like double down or triple down next bull cycle when the price is actually like going up or surpassing all-time highs. Do you agree with that? Disagree with that?
I think most people get in when it's a bull market for sure. So we'll see how that plays out in the next 12, 24 months.
For sure. This is another topic that you touched on a little bit earlier, but I think it's worth diving into a little bit. How do you see like patterns of energy consumption? How will that change as we transition to this like Bitcoin market? Right. Like right now you said like the demand for energy is relatively volatile, but in the future, when Bitcoin miners are potentially a large part of the energy consumption, would they like them curtailing make the consumption of energy more steady over time? Would energy prices be more stable? Would they be less stable and more volatile? How do you think about that?
There's probably a few things impacting this right now. So, we're going from a very centralized monopoly utility type of way of operating power grids, largely using more dispatchable generation like coal and natural gas and nuclear and hydro, to a market where in the last 20 years, there's been a lot more deregulation of the market so that buyers and sellers can actually interact in that market rather than having to only function through the centralized utility. And at the same time, you're seeing more volatility on the supply side with continued build out of renewable energy, solar and wind power. The impact that Bitcoin is having here is that it's both a supply response asset and a demand response asset. So it's, you're operating the data center. You can actually co-locate those data centers with renewable energy so that if there's a surplus of renewable energy at a given time of day when the sun is shining and all of your solar farms are producing a lot of energy, then the Bitcoin data center can absorb that power and reduce volatility on that supply side. And then on the demand side, when prices are high, demand is high, there's demand for that power or power of any type of generation asset, then the data center is able to shut off and minimize volatility on the demand side. I think where we need to continue to see additional improvement in market design and how markets operate is going to be, not just Bitcoin data centers, but other industrial customers, commercial customers, and residential customers also starting to see a real-time price signal and operate more responsibly and minimize volatility again on the demand side. So absolutely, Bitcoin is a key part of minimizing volatility in the power markets. In terms of where price goes for power, I think that the expectation generally is that as society moves back towards sound money, we should see the cost of everything go down. So the real cost of power actually has decreased even in the last 50 to 100 years, but the nominal cost with inflation has gone up. So supply and demand also matters in terms of price, but innovation continues to drive the price down as well. So I tend to think that we'll see power prices and volatility decrease over a longer time horizon.
Yeah, I agree with that. When it comes to entities interacting with more of a real-time power price, whether it's Bitcoin miners or other industrial entities like you suggested, what's going to be like the catalyst, or how is that going to happen? Like, does government need to come in and make it to where the market is more clear, or does the market just naturally, find, or do entities within the market figure out that like, hey, like we need to be using this more real-time power pricing mechanism? How do you think about that?
It's hard to say. If you look back 20 years, the power markets were generally run again by, it wasn't even a power market. It was just centralized utilities, monopoly utilities that defined what the price was. And then they would go out and build the generation mix that could meet the peak demand that arose from that fixed price. But you had some large industrial consumers come in during that time and really advocate for wholesale participation on the load side. And those were, well-financed large industrial consumers who needed low-cost energy if they were going to sustain their business operations.